If you're looking for a second home, an investment property, a rental property, rentals are huge right now because there is just such a deficit of housing on the market or whatever. A lot of people are doing a rental investment property, and that's a great way to earn some income for yourself.
You have a lot of equity in your home. It might be a good time to pull that out and buy an investment property, because not only are home prices supposed to go up 20% or more, rents are going up at a rapid pace.
Yes.
So as a landlord, you could take advantage of those rising rates for rents and have someone else pay your mortgage, which helps you build equity in a home and helps you build financial wealth.
Yes. And on that note, Michelle, what would you say to those that say, I would rather not, I'd like to, take a second out versus lose the interest rate that I have right now, because people are afraid of having a higher interest rate. How would you address that with somebody who does want to get into an investment property, but does not want to lose their interest rate that they currently have?
I mean, we always take a look at that. And really one of the things to determine when I'm looking at advising a client is, how much is the balance on your first and how much do we need in terms of a second or a home equity line of credit? If that home equity line of credit or second is going to get so large that it starts, it's a third, a half, or even, more than what the balance on the first is, then we would start looking at doing a new refinance. And the reason is, even though, let's just say, for instance, your rate on your first, is in the 2s or even the low 3s, if that second mortgage interest rate is going to be up in that 4 to 5 interest rates, range, you have to look at the two rates combined. You have to look at how those blended rates come together and if it makes more sense to do a new first. The other thing is, on a HELOC, don't forget that's an adjustable loan. And those loans are tied to what prime is, prime rate. And prime rate, when rates go up, will continue to go up as well. So now you've got yourself in this unpredictable, adjustable second, and that just may not be the best place to be. So even though you don't like in your mind that interest rate on the first is going up, if the overall payment is going to be fixed and you're protected and the blended rate is still better, that might be a better way to go.
Right, because those ARMs might end up costing you more in the long run.
Oh, for sure. Yeah.
And then you're going to either have to refinance or do something else anyways.
Yeah. And then at that point, maybe rates are even higher when you're trying to refinance. The other thing is, a lot of people like to take out a second or a HELOC to pay off debts and things, which is a great idea. So if you're thinking about investing, maybe you just want to do a cash out refinance, pay off some debt, get money for a down payment on an investment property, and lower your overall monthly debt because you're paying off debts. So even though you're taking out this money, you can pay off some other things, that might make sense to do that.
Absolutely. Because credit card interest rates are typically higher than our home loan interest rates.
Oh, yeah. By a lot. We know that. 18%, 20%.
Yeah.
So there's the only good debt, they say, is mortgage debt. So
exactly.
That's what we like to advise our clients to do. Try to get things onto a fixed appreciating asset, which would be your home, versus like a credit card or
absolutely,
even like a line of credit could be dangerous depending on the client and what their income situation is. So yeah.
Perfect. Well, thank you, Michelle, for answering our questions today. And if either of us can help you, we would love to. Our information will be below, and reach out to us. So Michelle can help us with that. And if you are interested in looking at a property, please reach out to me. I would love to help you with that. And Michelle would love to help you with your loan. And if we can answer any questions for you, we would love to do that as well.